Welcome everyone to Charts Focus 1, where we teach you how to work hard and trade smart. In this recap video, I want to go over how we swing traded ticker symbols SPY or SPY and SOXL, or how I like to call it, SOXL. The respective returns were 74% plus and 36% plus. This was all done through the live Discord chat room, so I will show you guys the screenshots of the entry and exit messages. And if you want to join us, become a member of the CFO Swinger Watch newsletter using the first link shown down below. Alright, so like in the other recap videos, there will be a white arrow to show my areas of entry points and a green arrow to show my areas of exit points for each trade. Let's get into it. So first we have SPY. And yesterday I wanted to long this ETF and I got stopped out pretty quickly as I had very tight stop losses for every single trade that I executed on SPY and other names. Now I'm glad I did that, because if I didn't, I wouldn't have been able to have much of a risk appetite to get into the next trade like this swing trade for SPY. And so while the market was live yesterday, I continuously reminded my members that we are most likely going to see an inside day candlestick on the daily time frame. And we can clearly see right here on the daily time frame that the price continued to retest, bounce, and stay over the daily 200 SMA, which is my yellow line over here, and it's flattened out now. And it was acting as a heavy level of support, and based on how the price was moving, we were bound to hold it. And so we did. Now, the only reason why I knew that we were about to make an inside day candlestick is that this big descending resistance trend line was providing a lot of downward pressure. So ideally, I arrived to the conclusion that we won't be able to break out of that hard level of resistance. And I'm so glad that we didn't break out of that and chose to form an inside day candlestick, because that meant that this candlestick was indicating a continuation run to the upside after we had such a big bounce on Thursday. So with the price coiling tighter and tighter to form this specific candlestick on Monday, we got ourselves a nice entry point. Again, the price action was showing really good coiling action as we continue to hold over the 200 SMA while getting that downward pressure from this descending level of resistance. All right, let's go down to my favorite time frame now, the 15-minute time frame, to see when we got in and when we got out. Okay, so as seen by this screenshot right over here, let me bring it over. Okay, we got in the SPY swing trade at 12:33 p.m. Pacific Standard Time using the 400 strike call contract that expire on March 24th, making it a weekly expiration contract. So it's a very high risk trade from a swing trader's perspective. Remember guys, I am a swing trader, not a day trader. And so if we translate this rough timing to the 15-minute time frame, if we overlay this message to the 15-minute time frame, okay, you can see which candlestick we got in at, as seen, okay, by this white arrow. Now, the number one reason for our re-entry, remember, we were getting stopped out because of my tight stop losses. And the reason why we went back into these contracts was that we were making a very textbook cup and handle chart pattern on the 15-minute time frame, which is inherently a bullish chart pattern. And so I wanted to get in before we saw a break out of this handle, so right before we broke out of this descending level of resistance. And luckily, at the same time, SPY was making a nice intraday horizontal resistance level at 393, which is also a nice whole number. And that was where we needed to go in once the price went over that level. So specifically on this candlestick. So my contracts ended up being filled around the underlying share price of 393.10, while the premium for the contracts were filled at $192 per contracts. And right after that, we held onto them until the close since we had less than 30 minutes left. Now fast forward to today, and we decided to get out the minute the market opened. And so the contracts pushed up right at market open, and we were able to get filled around the underlying share price of 397.85-ish, while the premium filled was around $335 per contract, resulting in a very nice 74% plus overnight return, or 75% if you want to just round up. And so this green arrow indicates that we got out right after market open, literally a minute after the market open. And we saw that nice big push very quick as well. And we were able to take that opportunity and get out with that 75% return overnight. So that was a very, very good swing trade. Now, SOXL or SOXL was another swing trade that we got into. So this ticker was the first one featured in the CFO Swing and Watch newsletter for this week. And we had two probable entries to the long side. One was an earlier, riskier entry price at a bounce of $16. And the other was a confirmation entry point over $17. So obviously this is a very lower risk entry compared to 16. And initially, we were looking for a bull flag to form as we started to consolidate the initial breakout over this macro descending level of resistance. This level of resistance goes back to early February. But we decided to get in early, making our entry point around that bounce area of $16. So how did we do this and why did we do this? Well, first of all, we started to make a horizontal resistance level around $16, or specifically 15.85. I'll make it green so that it's easier to spot for you guys. Now, $16 is just the rounded up number of this specific level at $15.85 to make the math of risk to reward ratios easier in our head. Okay, so just remember that. Now, I initially wanted a pullback to this initial breakout resistance level at 15.25 right over here, and I'll mark it as yellow. All right. Now, I was expecting either a retest of this level or just around the converging point of the descending level of resistance trend line and the resistance level at 15.25. So right around here, okay, this converging point right here. But I assumed that would be too much of a pullback and it could really push out all the buyers who were in this initial breakout candlestick. So I was glad that the following day from the initial breakout day, which is this daily candlestick again, we held a higher low right over here compared to the previous low on this breakout day's low. And this low right here happened to be around that 15.85 level, as the lows of this candlestick, or the low of the day, was right at $15.83. Okay, so with that in mind, if you go on the 15-minute time frame here, And if you see this screenshot, let me bring this over for you guys. Okay. We were consolidating quite well for, a long time here. And so as we were watching this consolidate, the price consolidating after that big breakout, okay, we got into these specific contracts at 7:27 a.m. Pacific Standard Time. So we got the $18 strike call contracts that expire on April 21st. And if we translate what's shown here, okay, to the 15-minute time frame, you can see on the white arrow, this is our entry point. So this specific 15-minute candlestick was where we got in. And so those specific contracts were filled in when the underlying share price was oscillating around $16.05 to $16.08 from my memory, while the premium of the contracts were filled in right at $111 per contract. And so as seen on the 15-minute time frame, again, we were consolidating quite well for the rest of the day after we got this entry point, conforming perfectly between these two intraday levels. And this was the first level, $15.85 as the support level. And again, this was also the daily level that we saw on the daily time frame, and $16.45 as the resistance level on the intraday time frame. So basically, we saw that bounce happening again at that 15.85 support level as seen by this lower wick, and we entered into this position once the price broke and then held through that $16 whole number level. Remember, that was our initial risky entry price. So as time went on, our position slowly returned 5%, 10%, and eventually 15%. And as the day closed, we saw a nice push over that intraday level of 16.45 as seen here, and we even made a small micro bull flag on the 15-minute time frame, resulting in a close over $16.50. So flash forward to today, we got a nice pump upwards with that gap up in the overall market, and this allowed SOXL to go over to $17, which had been my first profit target for my members in the newsletter on Sunday night. And so again, just like with SPY, we got out. We exited the minute the market opened, right? And our contracts sold and was filled right at $151 per contract, with the underlying share price rising to around $17.08 from my memory right after market open, giving us that juicy return of 36% plus overnight. And so here is what that message was, our exit, right? So we were up 74% plus, and then we're up 36% plus. Now, obviously, as seen here, okay, there are more profits that I could have taken at home, but no one, not a single trader is perfect during an exit sell for a trade to the long side or to the short side. And you guys have to remember this. The market doesn't and will never care about where you exit. Again, the market doesn't and will never care about where you exit. So it didn't care that my profit target was $17 because, again, it pushed up higher over $17, right? And we reached a high point of $17.52. And so the only perfect thing in my perspective was that I was disciplined enough with my initial game plan as I entered with my initial entry at $16. held through, and then exited right at my initial target of $17. All right, that is it for this video. If you liked what you heard, please leave a thumbs up down below. And if you're new here, check out the description box below for the link to the CFO Swing Watch newsletter. You can gain access to the current swing trades that we have right now and much more. Also, make sure you guys check out the other recap videos on this channel to continue your learning in trading. Thank you for watching, and I'll see you all on another video.